Morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where each morning we reflect on where the markets open in Asia and a likely travel for the day. Let's kick off in Geneva, where it was revealed in the press yesterday that the biggest industry is not tourism, but it is commodity trading. So Rustin Edwards, head of fuel oil procurement, Euronav, no pressure from the Swiss government. Prices rising this morning, but we're struggling to hold above 70 despite the fact that we've had missiles raining down on Aramco and OPEC have kept their supply shut in.
Yeah, good morning, Sean. Good morning, everybody. Happy belated International Women's Day to everybody. It's an interesting market. I mean, we did have the spike yesterday up above $71 on the back of the missile headlines, but the missile attacks happen almost regularly, it seems. I mean, it's part of the headline news feed, and it almost can fade into the back pages unless there's an actual strike with actual damage. So I think the market sold into that rally, which is probably the proper news. And now we've got crude going back down again today. I mean, the $3 trading range yesterday is endemic of a market that's gone toppy. I mean, I look at the way OPEC's been managing it. They've had really good discipline, which has kept enough oil off the market. However, the problem with this rapid increase in the front month curve, pushing things into this large backwardation structure, refining margins on the back end have not been keeping up. I mean, so we've got distillate cracks getting hammered across the world. There was a spike in the margin in U.S. Gulf Coast on the back of the refinery shutdowns, but that's starting to come off now as well as refineries come back and running, and the actual demand picture is still not as strong as the front month crude would make you think. So I think we've probably hit a short-term top here, and we probably pull back.
Laurie, welcome back. Laurie Hatayan, MENA Director at the Natural Resource Governance Institute in Beirut. Laurie, your thoughts coming out of the OPEC surprise last week?
Well, I think it was a smooth surprise, let's say, because there was agreement. From what I see, it's like the Saudis and the oil producers that have like really difficult economic situation were happy to continue the cuts to see the prices up, because they need the prices up. And for the Russians, I guess, like they're getting a sense of shale not coming back as they expected with high prices. So I think that this time it was a smooth decision, like to roll over. Again, surprise, surprise, because we've been in your show and everyone was saying like, no, production will come back. And there was a possibility to come back this time with 1 million and plus, but we see that they've taken another route. So, but I guess like the main objective was to keep the prices high, because they know that they cannot keep it for long that high. And yesterday, Patrick Pouyanné, the CEO and president of Total, said it. He said like the natural prices or the normal prices should be around $50 to $60. And now today we're talking about 70, but very difficult to see the 70 hanging on. So I guess like, and before that, if you remember, Alexander Novak was saying that, guys, yes, we are maybe a bit greedy, but we have to accept prices between $45 and $65. So I guess like everybody is guessing that maybe 60, 65 could be the normal price. But what we're seeing today is an exception. And I'm sure the producing countries like Saudi Arabia, Iraq, the other GCC countries are happy to see these prices up.
Well,
so that they could make campaigns.
It certainly takes their fiscal balance sheets back closer to break even. Let's welcome Homayoun Falakshahi. Excuse if I've got that pronunciation wrong. Senior commodity analyst at Kpler. Perhaps you can guide us on that, Homayoun. But I do notice that you're actually using the light from your window to shine on your face. That's got to be a first for London this spring.
Indeed. Hi, Sean,
and welcome.
Good morning, everyone. Thanks very much.
Do you think that OPEC Plus were correct last week in forecasting that maybe there is uncertainty about more barrels from OPEC?
Yes, yes, absolutely. And just by the way, let me thank you on the pronunciation of my name, which was absolutely perfect.
Okay.
But yes, absolutely. I think OPEC Plus took a decision that it seems, even though it came as a surprise, it seems that they had to take this one. And by that, I mean that um, if you look at the balance between the beginning of the year and when the meeting happened, a few days ago, it seems that that balance wasn't that large between supply and demand. So demand hasn't really picked up globally as much as I think OPEC Plus thought at the beginning of the year that it would do. And so just by looking at global onshore oil inventories since since the beginning of January, so since the beginning of the year, we had just lost about 15 to 20 million barrels globally in about 2 months. So if you make the calculation, it's just around 250 kbd difference on a daily average basis. So really not that much. And so if you imagine that OPEC Plus was before the meeting, people were thinking, most analysts were thinking that we should expect about 1.4, 1.5 million barrels per day being back on the market from the 1st of April. Well, if you look at inventories again, it seems that it didn't really make sense. But still, I think that came as a big surprise. It seems that it's especially the 1 million barrels per day that was kind of pushed back from Saudi Arabia. This is something that they themselves have the hand on, and only themselves. And I think it's a card that they were willing to play coming into that meeting, and it's something that maybe we should expect as well again at the next meeting. But yes, but I think that the big thing is global supply and demand balance wasn't there yet for OPEC Plus to actually allow more than 1 million
Or
barrels per day to
certainly
come back on the
they
market.
seem to wanted more. Rustin, I have a special headline for you in the digest today. I've never seen anything like this. New York Times headlines, not every day they write big smashing headlines about shipping, but apparently the containers that should be in LA are stuck in Singapore and so forth and so on. But basically, the big article in the New York Times that shipping is having a real logistics nightmare. And as a result, things are not where they need to be. Your thoughts on that and its impact for the markets? You're on mute, Rustin. Sorry.
Sorry about that. The big undercurrent, that's been back in the economic headlines has been the specter of inflation picking its ugly head up and frightening the markets. I mean, the container industry has had a very tough time rebalancing its logistics flow due to COVID-19. So you do end up with container boxes that have moved across the world, have been isolated in certain locations. They can't get out of port because either A, there have been lockdowns or lack of manpower due to lockdowns. And so boxes don't get emptied into warehouses and get distributed down through the supply chain to the end user. But it's also caused a rapid increase in the price of freight because people need to move boxes back and shipping companies want to be compensated. So if you look at the whole box rates have almost gone up 200, 300% over here in the last 6 months, which is going to start translating into consumer price goods on import bases. I mean, there have been a few headlines I've read in the UK press about small mom and pop stores having to pay $6,000, $7,000, $8,000 for a container that normally costs them $1,200. So when you start getting that price escalation hitting the logistics chain, it eventually ends up in the consumer's back pocket, and boom, you've got your inflation.
And what about in distillates? Is there an elevated price there?
Well, the distillate cracks have been under a lot of pressure. A lot of that's brought around by the jet fuel overhang that's still in the market. But when you look at the ICE gas oil distillate crack at 560 this morning for April, that's a pretty low number for a very large industrial use fuel. Part of this, of course, is looking outside Geneva, it's going to be 15 degrees today. So winter is pretty much coming to an end, and home heating demand is dropping off the face of the cliff. But you still have good demand for the light end of the barrel in regards to 0.5 fuel, because ships are still moving, people are still moving goods. But even that high price of fuel, when you think of bunker fuel going up 7, 8, 9, 10% in the matter of a week, and freight rates not following, well, that cost eventually starts getting passed on down the chain to the end shipper, which then gets passed on to the final goods that are sold. So this whole specter of inflation is coming out and is becoming a front-facing entity that's going to start impacting a lot of things.
Laurie, we've also a story in the digest today. Greece and Egypt reach a compromise in the East Med. There seems to be this ongoing kind of game between Egypt, Turkey, and Greece about oil and gas rights in the East Med. What does this look like?
Oh, this is not a major story, because I think the issue is that there is a strong relationship and cooperation and partnership between Greece and Egypt, and stronger than anything. Because they have the backing of the US, the EU, the French, they are partners in the East Mediterranean Gas Forum, and they have one enemy that they don't like, currently, Turkey. So all of these are like small differences that could be just like solved easily with communication. And today there is an East Med Gas Forum meeting.
I thought Turkey and Egypt were kind of flirting together to upset Greece.
It's Turkey actually approaching Egypt and flirting, but there is no reciprocity there. I think like Egypt is not still not happy, and they want to see more action, especially not interfering in the Egyptian political sphere and the Libyan political sphere. This is what they want, so that they could go back to a normal relations with Turkey. But for now, I guess Egypt, Israel, Cyprus, Greece, they're all in one. Camp against Turkey.
The other issue that may have Homayoun affected OPEC Plus decision last week to hold back was the uncertainty about Iranian oil barrels coming back into the market. And we are seeing that even without sanctions relief, increased sort of sanction busting, if you like, in terms of Iranian oil making its way onto the international markets. What's the outlook for that going forward before sanctions are lifted?
Yeah, absolutely. So since the election of since the U.S. presidential elections, the beginning of November, we've started seeing
Biden won, right? Biden did win, right?
It seems so. So yes, I mean we've
completely rigged, but he won nonetheless.
So we've seen Iranian oil exports pick up already. So they were basically at before the elections, they were staying at levels around 350,000 barrels per day over the previous few months, and we saw that almost double in a matter of 2-3 months. So between November and January, we've seen a little bit of a decrease in February, but I mean that is not yet definite numbers because of the way that Iran exports its oil and try to hide many of the things that they do. Generally, it takes us about 2 to 3 weeks more to come up with a better estimate. But still, so yes, so we've seen a doubling of these exports. Most, if not all of them, going to China, which remains by far the very largest customer of Iranian oil. There's little volumes that still go to the Mediterranean. So that means to Syria.
Is there a sense, Homayoun, that how big could this export be if Iran wanted to, if they had their, if for US was to say tomorrow, we're not going to police your exports, have they the capacity to ship 1 million, 2 million a day?
Yes, I think so. I think first of all, it comes to production capacity, which it seems that I think in a matter of 6 months, we could expect about 1.5 up to a maximum of 2 more million barrels per day in additional production. In up to, again, it will take them about maybe 6 months to reach that. And yes, I mean, they'd be able to ship that to their traditional customers, which are mainly Asian markets, so China, India, Japan, South Korea, and then it'd be to the Mediterranean, Turkey, and the EU. But then it really depends on the customer's will to actually go ahead and take that risk. So as soon as that risk is lifted, as soon as, for example, U.S. secondary sanctions are lifted, I think we should expect another uptick of Iranian oil. But right now, I think the upside, so right now, until sanctions are lifted, the upside for Iranian oil exports is quite limited. I think we could still see another maybe 100 or 200,000 barrels per day reach China. But apart from that, I don't think there's much more that we can expect from Iran, again, until other customers feel brave enough to start importing again from Iran. But that will, I think, is there from other customers.
Rustin, the other issue on the sort of mobility of demand for products coming back, obviously there is the aviation fuel, but there is the question of will people get moving again back to offices and commuting and such things. We had a story overnight, BP announcing that their 25,000 office-based staff would be asked to work 40% of their time from home in a kind of post-pandemic world. We've seen HSBC announce something similar, cutting back the size of their office space 40%. What do you think the outlook for that is and its impact on the possible demand curve going forward?
I think the outlook is pretty strong that we're going to see a change in people's work habits and work environments post-pandemic. I mean, it becomes very comfortable working from home after you get used to the whole idea of being in your house. I mean, when you think most people, when they go to an office, they're there for 8 to 9 to 10 hours a day. They might actually only work 4 to 5 hours. The other 4 to 5 hours are spent in coffee cup chatter or walking around or going to have lunch or what have you. So I find that my own personal experience working from home is that it's been a very efficient way to work. I mean, technology's advanced to the point where you can get the same, if not more, productivity from people. You're not commuting, so therefore you're not wasting 1.5, 2 hours of your day just in the transit mode. You're actually, getting up, having your breakfast, sitting down, doing a little work, go have lunch.
And there's clearly big savings from the employer side, right? Office space, office rent, and all of the associated costs with it.
Well, that is a big savings on the overhead side, but then you also have to think of the knock-on effect of all the secondary businesses that develop around office hubs. I mean, you think of all the sandwich shops and all the people that they employ, all the coffee shops. That's going to be a very interesting transition in that side, and how do the governments deal with that inflow of potentially unemployed people looking for work?
Well, maybe it'll become you're banned from working from home in year 2 of the pandemic, as compared to year 1 where you were banned from working from your office.
This could be the revitalization of the high street. I mean, you think of all the different villages that that seems to be a constant theme, at least in the UK, at least in here in Switzerland.
You mean because people are staying in their towns, they're not going into the cities?
Yes, and so it could just be a diametric shift out of the city back into the village, and it could be overall a better move for the economy and a better move for the environment.
Laurie, meanwhile, back at the ranch, I'm looking for some analysis on these events that we saw in Saudi Arabia over the weekend, this geopolitical, what is this? Is this part of the big rapprochement between Iran and the US feeling each other out? Or is it, we saw this 18 months ago, of course, spectacularly, the Ab Cake facility was hit pretty hard. What do you think this is, and where do you think it goes from here?
Yeah, so this is a phase 2, or if you want, scene 2 of the movie that we're watching now, the Iran-US rapprochement, as you said. So scene 1 was like the moment that Biden took over until 21 February, where the Iranians were really pushing hard. There were like public statements saying that we want to go back and talk to the Americans, but we have the 21 February, which is like the deadline for the additional protocol implementation. After that, we don't know what will happen. So it didn't work. So now this is scene 2. Scene 2 of that rapprochement is like, okay, we go aggressive. We work on our proxies, do these hits constantly in Erbil, in Iraq, mainland Iraq, in Saudi Arabia. So this is another way of the pressure that the Iranians are putting on the US until the US takes action in any direction, either completely lifting the sanctions or part of the sanctions or whatever it is. And I think this scene 2 will last until the elections in Iran. So you have until June, you will see that if no action has been taken by the Americans, because this is what the Iranians are expecting, that they want the Americans to take the first move for now.
We didn't see the Iranians give anything on the back of the US decision to not support proactive engagement in Yemen anymore, or the sort of critique of the ruler of Saudi Arabia. The Iranians didn't see that as anything positive, didn't sort of give anything back for those signals.
So that is because some analysts say, and maybe I agree, that the Iranians are not interested in the JCPOA anymore. They're not interested. They want something new, and they don't want to stop their nuclear activities. So I think that if this is the reading and if this is the strategy now, so then definitely they're not going to take action, and they will look for other venues to talk to the Americans. Let's wait and see for now. One additional information that I picked up from the news these couple of days, it's like the head of the what is called the
Meghan is upset. You picked that up, right? Meghan is upset, and
yeah.
that is the news. Meghan and Harry are upset in their palace in Los Angeles.
Yeah, so I'm boring.
But besides that,
yeah, I'm boring. I don't get excited about that. So I got excited about the news that there is a general called Saeed Mohammed, who's the head of the IRGC Khatam al-Anbiya construction headquarters. He resigned. And this is a sign that he might be running for elections. And this is a younger generation of the Revolutionary Guard that might be taking the presidency. And this was one of the readings that we had, that maybe Khamenei is more interested on bringing on board younger generations to take over, so that he projects what the young generation in Iran wants, etc. So I think that is an important thing that I will be following up during the coming weeks.
Homayoun, what are your thoughts on that analysis regarding the geopolitics of Iran, Saudi Arabia? And Laurie mentioned 2 phases. Is there a third? Does this get hotter before it gets cooler?
I think so, because I think first of all, it's a way from both sides to gain leverage, and I think this is what Iran is trying to do, is gain as much leverage as possible. And let's not forget that when it comes to diplomacy and international relations, Iranians are extremely patient. And even though it's true their economy is in a shambles, and they would benefit very much from the lifting of sanctions, I think they are ready for it to take another few months, if not even more. They've shown that they can handle the situation, even though again it's on the ground, it's really mostly the people that are suffering, let's say, rather than the regime.
Well, if they can get up to 1 million barrels of export a day at $70 a barrel, then they can probably hold out for a little longer.
Exactly. I mean, the higher oil prices go, the higher their exports go, then the higher they'd be able to take on that situation. Even though even with high oil prices and high exports, it's still quite difficult for them to actually access the money that they are owed, and get that cash back into the country. So I think looking at the situation again, it's a way from both sides to gain leverage. As Laurie mentioned, the upcoming elections in the country in June are a very important event, and so I don't think we should expect any kind of breakthrough to happen before that. I think internal politics play a lot, as Laurie mentioned as well. So that general that Laurie mentioned actually announced his application to the elections. But I think yes, internal politics play a lot, and it seems that hardliners are very well placed to win it. And again, you look at the local politics. If I were a hardliner and I was kind of pretty sure that my side would win, I would do the most to uphold the situation until after the elections, and then gain the credit of whatever sanctions get lifted, and if the economic situation improves.
So this situation in Saudi Arabia could be part of that internal politics of the Iranian election.
It could be, but at the same time, let's not forget that the Houthis are not 100% dependent on Tehran. It's true that they receive kind of missiles and other military equipment from them, but at the same time they have their own agenda. So yes, it could play into the regional politics, but let's not forget that the Houthis also have their own agendas, and that obviously they're in a war with Saudi. So So the
Yeah.
fact of
Well,
launching
it does still
missiles on
seem
Saudi can also explain
it
that.
does still seem amazing that they're able to get missiles from all the way over in Yemen to Dhahran. That's quite a distance.
Absolutely. Yeah.
Let's go to the survey question for this morning to see where the view in the room is regarding getting back to work. It sort of looks like a lot of words, but essentially it's how many days are you going to be back in the office? After a year of positive experience with most working remotely, what could the time split between home office settle at in a post-pandemic world? Will it be 20 at home, 80 at the office, 30% at home, 70 at the office, 40 at home, 60 at the office, 50-50, or 60-40? The BP choice is 40-60, as is the HSBC one. What do you think it'll settle at, is the view here. And welcome your thoughts on that. Not what you wanted to settle at, but what do you think it will settle at? Rustin, looking forward to the week that's in it, Tuesday morning, as we started out, oil prices up a little in Asia, but still struggling to hold on to that $70 handle. Do you think we can close above it this week?
I'm highly doubtful that we will. It is one thing when financial flows goose the market in one direction or another. The headline algo trade that pushed the market above 71 on Monday is far detached from the fundamentals in the oil market itself, where you actually have real demand is still lagging. There's still roughly about 74 million barrels of refining capacity that's currently running, which leaves about 19 million to 18 million offline. So you haven't had any demand recovery yet that would justify a $71 price in the front. So I think it has a hard time to support plus 70. I think we do retrace back from this point. What I say in the low to mid 60s, probably more low 60s than anything else in my mind.
Laurie, where do you think OPEC Plus goes from here now? We're already, one meeting passes, we immediately thinking of the next one because they're only a few weeks apart.
So it is so difficult nowadays to predict what they will be doing. I guess, like Amina yesterday, said, like, whatever you think they will be doing, you have to think the contrary. And I think I agree with that. And I'm so hesitant nowadays whenever before the OPEC meetings, they ask me for interviews. I decline sometimes because I feel like whatever I will say, it will be the contrary. But I guess like the St. Thomas policy that the Prince Abdulaziz is applying, which like I want to see before I believe, if I see, I believe. So I guess maybe still they might.
He wants to see your summer holiday airline ticket. So
exactly.
That's the next requirement to coming on this show. You got to show your summer airline ticket.
Exactly, and doesn't look like good, right? Because one of the stories in your digest says like 30% of the destinations for summer destinations are still closed and under lockdowns, and they have measures. So I'm not sure how much people will be able to travel. So I guess if this is it, the St. Thomas policy, so then until everything is back to normal and they can really see like strong recovery in demand, they will be very hesitant to bring back these barrels.
That we if we get well, the demand outlook does look, has its half full, half weak, half empty days. Let's go to the survey result for views on that point. 50-50 seems to be tipping the biggest vote, but of course this is spread across all the answers. It certainly will be a phasing out. We'll have to see where that goes. Homayoun, your thoughts on the rest of the week, where this $70 handle holds or not, and where that we saw in California gasoline demand outlook picking up. In Europe, Britain is looking like it's opening, but the rest of Europe still in shutdown.
I think I completely agree with Rustin. I think the fact that you kind of had a top at the beginning of the week on oil prices on the news that that the Houthi missile hitting Saudi, to me, it just doesn't look that good. The fact that you've had that top already, and that prices are struggling to keep at that level. So until the end of the week, I'm not really positive on the oil price. Even though you never know, some event could happen and change that. I think that again, looking at the whole situation, as Laurie said, OPEC Plus is really waiting for real signals that demand is picking up, and we're not yet seeing that, at least in global oil inventories. When it comes to the vaccine rollout, it's been quite relatively strong in the UK, and even though it was kind of weak in the EU, for example, compared to the UK or the US, I think over the weekend we've seen a lot of a huge vaccination campaign take place in France and Germany. So I think we may be at the time where vaccination will pick up in the EU as well, and will start to catch back with the UK and the US. So it's true that they'll be a few weeks behind, but they will catch them back. So I think as soon as this starts being more efficient and economies start opening up, then OPEC Plus will have the ability to bring a few more barrels on the market. And the fact that they are meeting every few weeks now gives them the edge in terms of flexibility to change their policy if needed.
Well, it ultimately means you can never short this market, which is, I suppose, ultimately their intention. It
Exactly.
seems they're going to move from not count. They're moving from counting inventories to counting vaccines, and that will be the number to guide how many more barrels will come. But that wraps it up for today. Rustin, thank you so much for your time. Laurie and Homayoun, thank you for joining us this morning. We hope you'll come back again. We got a halftime talk interview this week on two subjects. One on the future of the Brent benchmark, which of course has got a bit of attention over the last few days because of the reconfiguration from Platts. And we also have an interview on the US-Iran rapprochement and what that might look like. So join us all on the halftime talk tomorrow. Until then, have a good day and catch you all during the week. Thank you very much.